Okay, a very good evening to everyone. Thank you for joining our Corporate Connect session today. I'm Sunny, your host for today. I'm recovering from a cough, so my apologies for the bad voice. This evening, we welcome Golden-Agri Resources as well as our audience from Moomoo Live. And this webinar is organized by SIAS and supported by SGX Group. We will kick off today's webinar with the market highlights segment by Cheong, equity dealers at Moomoo Singapore, followed by a corporate presentation by Mr. Richard, Investors Relation Director at Golden-Agri Resources. Golden-Agri Resources, listed on SGX since 1999, is a leading palm oil plantation company. In 2023, it generated 9.8 billion in revenue and 328 million in profits. Operating in 15 countries, Golden-Agri Resources focuses on technology-driven production and distribution of palm-based products. The company emphasizes on ethical practices, operational excellence, and sustainability to create long-term value for stakeholders. But first, let's welcome Cheong to share with us the latest market highlights. Over to you, Cheong.
Thank you so much, Sunny. Okay, very good evening to everyone. Thank you for coming by to this Corporate Connect session today. Before I start, just let me do a share screen to the PowerPoint that I do have. I guess the PowerPoint slide has been shared successfully.
Yes.
So yeah, thank you so much, Sunny. Just reintroduce myself again. A very good evening, everyone. My name is Cheong. I'm the equity dealer with Moomoo Singapore. Pleasure to be here to talk to everyone about some market updates. Okay, without further ado, I'll just go to the first slide first, and then I'll continue from there. So this is just a visual representation. Okay, we went twice. I'm very sorry about that. Okay, so this is a visual representation of some of the markets I think we are more familiar with. And then this has been the year-to-date returns of this market. Of course, these are for as of yesterday, 5:30 p.m. So this would include the Singapore market, Hong Kong market, the closing of these markets as of yesterday, including Japan and Hong Kong, as well as the Shanghai. So not inclusive of the US one. So from here, we have seen that the S&P 500 as well as the Nasdaq, they have done really well. Together with Nikkei 225, which is the Japanese index that most investors look at. So all of them, you see, they have done more than 10% year to date. And today we are just in the 21st of May. And then the next one that a lot of investors, I think, they look at is the Chinese side, so the Hang Seng Index as well as the Shanghai Composite Index. So the Hang Seng Index year to date has gone up about 15.19%, not including today's trading session. For most investors, we have seen that the gain for the Chinese equity markets has mainly been coming from the last you could even say the last 30 days itself, the gain has been coming from there. And then lastly, the last two that we have here, we have the Korea's KOSPI as well as the Singapore Straits Times Index. Not doing as sexy as the ones at the top, but the thing that I really want to emphasize and highlight is for S&P 500, the Nasdaq as well as the Nikkei. All of this, the year to date, they're more up by more than 10%. However, at the same time, investors should know that they came from a very high base. So they did really well last year. And then this year, they have continued to perform well. The main difference now for Hang Seng, as well as the Shanghai Index, is that for many investors who have been following the Chinese markets, you have known that it has been coming down a lot, especially last year. So they have started at a lower base, and really, I think for those who have been following, especially on the Hang Seng Index itself, you have seen that around late of January was this low, and then from there on, it has started to climb up steadily. Of course, this has a lot to do with the way the government has been working with the markets as well as all the different stimulus, etc. The interesting one will be for Korea. So Korea did really well last year, in a way mimicking what has been done with Japan. However, this year to date, it has not been doing as well as how the Nikkei is doing. Of course, a lot of factors comes into play. This could be First, with the currency exchange, with the interest rates differences. And then lastly, we do have the Straits Times Index. So while the Straits Times Index over here looks to be the lowest, I think investors in the Singapore market, what we really love about the Singapore market is really the stability of the Straits Times Index as well as the whole entire Singapore market. So there'll be years, let's say in 2022, where the US market has been undergoing a downturn, 20 over percent, 10 over percent downturn. Whereas the STI, generally, we are a more stable market. And then this is where really investors favor this kind of stability. And then, so in years where others are doing well, we may not be doing as well as them. But the beauty, of course, it really comes down to the stability part. So this is just for this year itself, where we have the Straits Times Index. So as of yesterday, of course, up 2.28% since the 1st of January. And then it's really being led by the trio of banks. So DBS, OCBC, UOB, and DBS. So the three banks, as well as the top gainer, Yang Zhejiang Shipbuilding. So Yang Zhejiang has been consistently doing well since the past 2 to 3 years for those investors who have been looking at Yang Zhejiang. And this year is still the top gainer so far year to date. However, of course, the main gainers for the Straits Times Index, give me a moment, has been, of course, the trio of the banks, so DBS, OCBC, and UOB. So they have all done really well for investors who have been looking at their, even just looking at the news has been constantly talking about them as well. So DBS, as we all know, DBS has actually been the first company in Singapore to cross the market capitalization of 100 billion Singapore dollars. This really happened after the earnings results by DBS itself. The profit for DBS was up about 15%. And then from there on, the share price, there was a lot of heavy trading. DBS share price, of course, it climbed up, and then it has now crossed, being the first company really in the Singapore Stock Exchange itself to cross the 100 billion market capitalization mark. Then, of course, we did see OCBC as well. OCBC did beat its forecast, rising about 5%. Whereas for UOB, the recent earnings that they came out with, it was down about 1.6%. However, overall, all three banks, so DBS, OCBC, and UOB, they have done share price wise, of course, relatively well year to date. And because these three banks, they take up about 40% of our Straits Times Index itself. So when the three banks are doing really well, of course, the index will be climbing with it as well. Then some investors might ask, so why only 2.28% year to date? So while the three banks have been doing really well, the index also have been put down by the other sector. I think mainly will be the Singapore REITs sector. So S-REITs, which is the third point that I have here today. So S-REITs, for any investors who have been holding on to all the different Singapore real estate investment trusts, you have seen, if you have not been dollar cost averaging down, you have seen that your cost price of it should be, if you have bought it pre-pandemic, etc., it will be pretty high unless you bought it really right at the start of the IPO, of course. The main issue with a lot of these S-REITs in Singapore, they are all very great company, like CapitaLand, Mapletree, Fraser, etc., etc. It's the higher for longer interest rate environment that we are currently in. So a lot of these really good REITs, they do actually have their interest rate, their fixed interest rate, which they have actually locked in pre-pandemic at a lower rate. So even though they have been doing okay and well, this one is really for everyone that's tuning in to really look down into their balance sheet, all of their different financial statements. You would see that their interest rate, a lot of them actually did lock in a lower rate back when the interest rates were lower. However, this higher for longer interest rate environment has lasted a lot longer than what most investors have anticipated. So it's been a long time now, long while, and a lot of these fixed interest rates that a lot of these good companies, it doesn't have to be just S-REITs, it could be any other companies in the world, any companies that actually do borrowing with banks or institutions. Their fixed rates will have actually had to be moved up a little bit because fixed rate depending on how long they have signed it for, a year, 2 year, 3 year, 4 years, etc. a lot of these rates have expired, and then this is where their expenses will actually increase, especially their interest expenses, because this high for longer interest rate environment is staying. I'll talk a little bit more about this in the later slides. So let me move on to the next slide. That will be really on the US side. So on the US side, just some market updates will be for the Magnificent Seven, which was dominating the whole of the US for 2023. All the talks about all these tech companies. So the Magnificent Seven, six of them actually have released their earnings results. Five of them, after the earnings results, their share price have went up significantly. And then we only had Meta, which has shown more. The share price have definitely come down compared to the other five. And then from here, we did see that companies like Microsoft, they have become the most valuable company in the world, and then now they are healthily above the 3 trillion market capitalization. Apple, which was the most valuable company previously, trading about 2.9-ish trillion market capitalization. And then for the big gainers for this Magnificent Seven would be Nvidia. Year to date is done the best year to date among all these seven stocks, and then we will be having the earnings for Nvidia this week as well. So investors who are into the Magnificent Seven or into the US tech sector, or even if you are invested into Nvidia itself, that day will be the most crucial day for most investors to be looking at. And then next, we have Federal Reserve and interest rates. So I talk about the higher for longer interest rate environment. Early in the year, or should I say maybe at the end of last year, there was talks about having up to 6 interest rate cuts for 2024. And then today's conversation is, will there even be a cut, or will there even be a hike? So the good thing is, as of the last FOMC meeting, I think the Federal Reserve Chairman, Mr. Jerome Powell, has reiterated that it's the hike is very, very unlikely, or more or less, I would even say he dismissed the possibility of a rate hike. And then we did have the US CPI figures last week as well. So there's a lot of after the US CPI figures last week, it was better than expected. So from after the release of the CPI itself, futures traders were actually looking at the possible of a rate cut actually as early as September. At one point, it was about 80% chance. Right now, if you were to look at it, it's trading around 50%, 50%. So of course, the anticipation has come down a little bit. But this has to do with a lot of different macroeconomic factors as well. So the whole Federal Reserve and this interest rate thing, it's really what is being in the minds of a lot of investors, not just in the US market itself. I would say it's as good as the entire world itself. Looking at how this whole interest rate environment will be doing, a lot of countries, especially in the European Union nations, they've started to cut rates. For example, I think Sweden has started to cut their rates as well. So it will be interesting to see if the US and the Federal Reserve will start to cut the interest rate, and hopefully and possibly maybe in September, like a lot of future traders were anticipating, or will it just drag longer, and then we will have this higher for longer interest rate environment. And then lastly, for the US side, last update will really be on this meme stock frenzy. It came back around last week itself. So things like your GameStop, your AMC, they have started to come back. Of course, it has died down a lot this week, even for yesterday itself. However, these are things that can happen in the US market. This kind of trends can come and go, and how long you will be lasting, how long it can sustain really depends. And I guess a lot of investors are looking to see how long this meme stock frenzy can sustain as well. So just some current and future economic events that's happening. So we do have the Israel-Hamas conflict that's ongoing, and things that have been happening as recent as a few days ago was there was a China-bound tanker. It was shot down in the Red Sea as well. This is a subset of this Israel-Hamas conflict. Then ongoing, we have the Ukraine-Russian war. We did see President Xi Jinping from China, as well as President Vladimir Putin from Russia. They have been meeting in Beijing the last week itself. So they have re-emphasized their strong bonds together. So this is also ongoing. together with the US-China tension, we did see US President Joe Biden he has also increased the tariffs. So essentially, the trade war is ongoing again with this whole US-China tension. And then we do have general elections. So some of the elections that are ongoing or finished are the ones you see here. The most important one that most people are looking at, of course, is the one for USA, which will happen in November this year itself. And then lastly, rate decision by the Fed. So would they stay? Would it cut? Very unlikely for a hike. And then these are just some figures that just came out not too long ago. This is for China itself. So for investors in the Chinese market, you have seen that the equities market at least has been going up. That there was a 10, 11-day streak for the Hang Seng Index itself. And then these are just some of the numbers that is doing relatively well, which was released recently. And then for US, the key one that I was talking about would be the inflation. So inflation has slowed down a little bit. Of course, there are arguments where they've been talking about it's from a high base. So the drop is not that significant. Of course, a lot of US consumers living in the US itself are feeling the pain. So this is where what the FOMC and the Federal Reserve they have been talking about, and that is to be patient and let all of this restrictive policy slowly take effect, especially with their 5.25 to 5.50 interest rate environment that they have. So really, for the effect to really take place, we just need time to pass for this whole interest rate to be effective on the economy itself. So just last, I think this is my second last slide. So this is just for Singapore itself. So the forecast for 2024 is still within 1 to 3%. For the Q1 GDP, we did see a 2.7% increase compared to the previous quarter. For Singapore side, of course, this one more relevant to all of us is sitting here today. So the core inflation went down a little bit compared to February itself. Of course, there can be arguments, of course, that this is on a high base as well. So this is really up to each individual consumer to see how much inflation has been affecting them. And then just to lastly quote on what our previous Prime Minister or current Senior Minister Lee Hsien Loong talk about, he talked much of Singapore's growth this year will really be dependent on external environment. And then just to close it off, so why should investors still continue to invest in the Singapore market? These are really the 4 key points I have today. So strong Singapore dollar, without a doubt, Singapore dollar remains one of the strongest currency. For anyone that has been traveling in the recent days, you have seen that Singapore dollar has been strengthening against a lot of currency, be it the Malaysian ringgit, which a lot of Singaporeans like to go over, or even the Japanese yen itself. And then next we have stability. Recently we did have a change of our Prime Minister. Even with that, the way that they did the change itself, it ensures that all of this stability stays. So there's not much changes in the cabinet, etc. This is one of the key reasons of how and why Singapore has been always so stable and strong. And then next, when I talk at the start, Straits Times Index not having just 2.28% compared to some of the other markets. The key thing for a lot of investors in Singapore is really because we are income investors. We like dividends, we like distributions, and this is where Singapore really excels in. So a lot of our Singapore REITs, even for our banks itself, they pay a good dividend as well. And then lastly, diverse investment opportunities. For investors in the Singapore market, you know they can invest in a lot of different financial products that suits your needs, suits your hedging strategy. And for that, I will just end the market update. Yeah, and I'll pass it over back to Sunny. Thank you so much.
Okay, thank you, Cheong, for sharing with us the latest market updates and highlight. Yes, as you can see from the presentation, year to date, a lot of the key markets, including Singapore, are doing well. And we wonder if the rate cuts were to happen in September, according to Fed Fund futures pricing, will the run that we see in the first half of this year continue towards the second half? Okay, so we would want to welcome Cheong back to share with us more as we pass each month of the Corporate Connect session to update us with the latest market updates that you have. Okay, thank you, Cheong.
Thank you.
Thank you. We will now dive into the corporate presentation by Golden-Agri Resources. I'll hand over the time to Mr. Richard. Mr. Richard, over to you, please.
Thank you, Sunny. Yeah, so first of all, thank you everybody for joining this presentation. And we will first do our corporate presentation. After that, we will have a Q&A session. So starting with the corporate overview, and Sunny already gave a nice introduction. As he mentioned, Golden-Agri is one of the leading integrated palm oil companies in the world. In Indonesia, we have about 530,000 hectares under management, which produced almost 3 million tons of palm product last year. Other than producing a wide range of palm-based products, we also have complementary businesses. We produce soybean and sunflower oil through our refining capacity in China and India, and we are also involved in sugar trading. Lastly, we also have a extensive network of representative offices, sales offices, and ex-tank operations in many of the major destination markets. So this slide shows the a flowchart of the core business in Indonesia, and you can see here the vertical integration where we produce everything from the oil palm seed all the way down to the end consumer product. So yeah, so we produce through our own R&D, we produce our own high-yielding planting materials, and as I mentioned, we planted 530,000 hectares. Which produced close to 10 million tons of fruits last year. All the fruits we mill ourselves. We have a capacity of 14 million tons, as we also buy fruits from third parties. And the mills produce the CPO, the crude palm oil, which we process for the most part in our 6 refineries with a capacity of close to 5 million tons per annum. And they produce the cooking oil, margarine, shortening, specialty fats, and other value-added refined products. We in recent years we have also added biodiesel capacity, currently at 1 million tons, and they produce biodiesel for the domestic market in Indonesia. The mill also separates the palm kernel. This is the seed of the fruit, and we crush the kernel in our 9 kernel crushing plants into palm kernel oil and palm kernel meal. The meal is used in animal feed, and the oil we further process in our 2 oleochemical plants with a capacity of 440,000 tons. They produce fatty acids, fatty alcohols, glycerin, and soap noodles. These are mostly used in cosmetics and detergents. And finally, we have our international distribution network, where we sell our products through over 100 countries in the world. So next section is about our key strengths, starting with the best-in-class plantations with managed age profile, continuing to deliver above industry yields. We have integrated business model that provides a robust profit base. Sustainability is our business imperative. Science and technological innovation for sustained growth, and finally, the strong financial position and consistent dividend distribution. So we'll go through each of them briefly. And here you see our plantations, the upstream business of Golden-Agri. And we can achieve above industry average yields through the precision agriculture that we apply, through the technologies that we use. We do our R&D, as I mentioned. We are also increasingly looking at mechanization of the harvesting process. To reduce costs. Digitization is very important, as well as the use of artificial intelligence. So in the middle, you can see that even though yields have been coming down across the industry, primarily because of lack of expansion in new plantings, nonetheless, Golden-Agri has consistently been above the industry average, 24% higher than Indonesia and 18% higher than Malaysia last year. On the right-hand side, you can see the age profile of Golden-Agri, where 7 16% of our trees are young and immature. That's where our growth will come from in the coming years. As these trees mature, their yields will increase, and that will allow us to produce more fruits. 58% of our trees are in their prime years, which is from 7 up to 25 years. That's when the yields are the highest, and that's where the cash flows are coming from. And then 26% of our trees are considered old, above 25 years old, and that's where we start to cut them down and replant them. And we have an active replanting program, currently replanting with a target rate of about 20,000 hectares a year. So I already mentioned the vertically integrated business model. Here you can see how this provides stable returns for Golden-Agri. The red is the upstream, that is the plantations. The gray is the downstream, which is basically the refining and the distribution of our value-added products. And you can see that over the years, the downstream has steadily increased its contribution to our overall results. And this also means that Golden-Agri has become less dependent on the crude palm oil price, which can be volatile. So we achieve high margin from the core upstream with leading scale, and we obtain additional margin from the downstream business through strong capability in each area along the value chain. So as you know, sustainability has been a key concern for the palm oil industry for many years. And for Golden-Agri, we intend to turn this into a strength, into a differentiating factor. And here you see some of the initiatives that we have developed. First of all, we have the pathway to net zero. We are looking at reduction of emissions by implementing our no deforestation, peat, or exploitation commitments, realizing carbon sequestration from carbon removal initiatives, methane avoidance and utilization, and renewable energy for heat and power. So we really try to use everything within the plantation. The biological waste, for example, is reused as to create energy. Then we are extending the supply chain traceability to include our global supply chain. So for Indonesia itself, for all our 500 over mills that are delivering to our refineries, we already have 99% traceability to the plantation. So for all the palm oil we produce, we know for 99% where from which plantation the palm oil is coming. And we are now also extending that to the palm oil and other products that we source outside of Indonesia. And this is important because we have increasing requirements, especially coming out of Europe, the European deforestation regulation, which has this traceability requirement. And we believe Golden-Agri is one of the first to be able to comply, giving us access to the European markets. Finally, communities within Indonesia, wherever we operate, these surrounding communities, they benefit from our operations. Currently, we have 161 projects under the Bright Future Initiative, where we teach these farmers organic, cash crop, and livestock farming to be able to earn additional income. So science and technology has always been an important part of Golden-Agri's operations. So Golden-Agri is still a pioneer in developing a management information system that we call War Room, where we can manage our plantations on a 30-hectare basis. This is the so-called precision agriculture, allowing us to be very efficient in terms of the harvesting process, the fertilization process, and so on. And this is important given our size. I think our plantations are about 6 times the size of Singapore. And so all the new technologies that we have seen develop, digitization, artificial intelligence, they all further enhance this use of technology. So for example, we develop new products to meet the new customer needs. They're looking for more nutritious and healthier product alternatives, which palm oil can certainly deliver. We're using the digitization also for the logistics network, the end-to-end supply chain management, also of course for the traceability. I already talked about the replanting program for Golden-Agri and the development of our own seeds. So what we do is we replant all plantations with new planting materials, and the trees, the seeds that we used, say 25, 30 years ago, they only produce about half of the yields that are the seeds that we are using today, the so-called clonal seeds. So what it means is that even though we are not expanding our planted area, we can continue to increase our overall production through these higher yielding seeds. And yeah, finally, we are also partnering with technology companies. So we're not doing everything in-house. We're also working with industry leaders for some of these technological innovations. So Golden-Agri has a stable financial position. As you can see on the left-hand side, the strong operating cash flow. Of course, we saw a very strong peak because of very high CPO prices that we experienced in 2021, 2022, you know, as a result of the pandemic. But last year we saw a normalization of the CPO price, and we think that you know, these levels can be sustained. That we saw last year can be sustained going forward. Our financial ratios are healthy, as you can see. The debt ratios have been coming down, and EBITDA over interest has been rising. Then finally, we are consistently rewarding shareholders while maintaining a strong balance sheet. Our dividend policy is to pay out up to 30% of underlying earnings, and it's been a bit lower. Of course, we had very strong earning years, which meant that the overall dividend yield was still very high. In 2023, we took a conservative approach because of the high interest rates environment. We prioritized bringing down debt, but going forward, we do expect dividend rate to improve again. Strategy and outlook. So yeah, I discussed most of this, so I'll be short about this. So in the upstream, it's mostly the yield intensification, and as well as the cost and efficiency through the mechanization and automation. And in the downstream, it's really broadening our product portfolio with higher value-added products that differentiate based on quality, health, and sustainability. So that's how we can differentiate from our peers and command a better margin. Capital expenditure this year is expected to be around 300 million, which it has been for recent years, and we also expect going forward it will stay around that number. Then briefly about the industry outlook on the right-hand side. So we remain very positive about the fundamentals. We see a tight supply and demand situation. On the supply side, we see that while palm historically was the largest contributor to vegetable oil growth, now because of the sustainability concerns, the palm has basically joined the other vegetable oils in terms of growth, which is now in the low single digits. At the same time, we see consumption continuing to grow because of growing world population, growing standards of living, and also the biodiesel is an important catalyst. And we continue to see biodiesel blending mandates increase, for example, last year in Indonesia, US, and Brazil. So then we come to the financial performance. So we recently released our first quarter results, and we saw unfortunately a bit of a decline, although we do think it's temporary. We had a forex loss. We had also the high interest expense, as I mentioned. and as well as the timing of some of our G&A expenses. So EBITDA was still pretty strong, only 6% lower, but underlying profit and net profit were impacted by the factors I just mentioned. So then we have the segmental results, and here we see the upstream, and yeah, we can see here that the 2022 was a very, very strong year with 35.5% EBITDA margin. But as I mentioned, this was exceptional. The reason was that we had a very tight supply situation for vegetable oils, and because of high inflation, Indonesia had a temporary export ban, which took away palm oil from the market. And we also had the Ukraine war, which took away a lot of the sunflower oil. So prices went up a lot. The good fortune at Golden-Agri is because of our international distribution network, we had a lot of palm oil outside of Indonesia, so we continue to sell at very attractive prices. 2023 was more of a normal year, we would say. And you know, those kind of results is what we expect to be able to achieve going forward. The downstream business, that is really a stabilizing factor. As I mentioned, less dependent on the CPO price, and we've seen fairly stable margins over the last couple of years, gradually increasing to about 5% right now. 5% EBITDA margin, and that is also something that we think we'll be able to sustain. And then finally, the balance sheet. So balance sheet remains solid. As you can see, the net debt declines further by 30% to only 269 million. And the ratios are all pretty strong. Debt to equity, the gearing improved to 0.56 times. Net debt over EBITDA to 0.28 times. And EBITDA over interest still strong at 4.18 times. So this completes the presentation. So we can go into the Q&A session now. Yeah, Sunny, I know you have some questions. I also saw there was a few questions in the chat. So what do you want to do first?
Yes, okay. First thing first, I want to thank Mr. Richard for that insightful presentation. We will now move on to the Q&A segment. So please feel free to submit your question in the chat. We are already seeing a few of the questions coming in. For our Moomoo Live audience, do click on the link to join us in Zoom and post your questions. We will endeavor to answer as many of the questions as possible. So we will now proceed to the Q&A session with Mr. Richard. Mr. Richard, I just have one question on my mind as a finance person. I looked at your presentation earlier. In FY23, Golden-Agri demonstrated a resilience with a 12% increase in the sales volume to 10.9 million tons, despite a 15% revenue drop to 9.8 billion due to lower CPO prices. What are some of the key drivers for Golden-Agri to maintain a robust financial performance compared to FY23, despite the decline in crude palm oil prices?
Yeah, so the sales volume drop in 2023 was because of this temporary export ban that I mentioned, and we've seen a strong rebound this year, as you can see from our numbers. But yeah, the key driver of our results continues to be the CPO price. So last year it went as high as $1,200 per ton, which was really a historical record. And last year it went down to about $800 to $900. So the $800 to $900 is something that we think can be sustained given the structurally tight supply and demand situation that I just discussed. So that will continue to be a key driver for Golden-Agri. So we have three drivers, the most important being the CPO price. Second, we have the production volume. So we do see a bit of a moderation in our production volumes right now, driven by the replanting that we are going through, as well as yeah, somewhat erratic weather conditions that we experienced last year. But as I mentioned, over time, the new plantings will all be much higher yielding, and will continue to increase our production over time. The third factor is the cost of production. Cost of production is fairly stable at slightly over $300 per ton. That is driven by the labor cost, which is in rupiah. So because of rupiah depreciation and productivity improvement, that is fairly stable. The other one is fertilizer. Fertilizer costs are in US dollars. They can be a bit more volatile, but they are typically going hand in hand with the CPO price. So as CPO price is moderated, fertilizer prices have also come down. So therefore, the cost of production is also fairly stable.
Okay. Thanks, Mr. Richard, for answering that questions and point out to us the key drivers that is keeping the robust financial performance going. So I'll move on to the pre-submitted question now. One of the pre-submitted questions, I'll go through the list. The first one would be, should Golden-Agri increase dividend year on year to maintain the dividend range or the dividend yield above 6% in order to improve the share price? Your take on that?
So, okay, well, it's certainly true that Golden-Agri is not growing as fast as it used to. We used to have our planted area continue to expand, but that has stopped for quite a while already. After that, the focus has been on our downstream. We have significantly increased our refining capacity, which was also fairly capital intensive. So that's why capital expenditures have been relatively high. Right now, we do believe that the company will continue to produce more free cash flow, which will open the doors for potentially higher dividend yield in the past. I think than in the past. So I think the current priority though is deleveraging because of the high interest. That is hurting every company, including ours. But beyond that, we do see opportunities for increase in dividend yield.
Hey, thanks for sharing that view on how the dividend outlook will be. The second pre-submitted questions is from another of our members. How are you different? How is Golden-Agri different from First Resources, Wilmar, or Triputera Agro Persada?
Okay, well, First Resources, they are also a integrated palm oil operator like ourselves. Although they're a little bit more focused on the upstream. Their upstream is about 2/3 the size of ours, but their downstream is only about 860,000 tons compared to, and that includes the biodiesel. While for Golden-Agri, the refining is already at 5 million tons. And then we also have about 1 million tons of biodiesel capacity. So our downstream is much bigger than it is at First Resources. And for Wilmar, it's the other way around. Wilmar is more downstream focused. So their plantation area is also about 2/3 of ours, similar to First Resources, but their downstream is much bigger. So ours, as I mentioned, we sell about 10 million tons of product per year. Total palm products, but for Wilmar it is I believe it's about 24 million, so that is more than double ours. Finally, Triputera, that is more of a pure play in terms of upstream. I don't think they have any meaningful downstream operations, and they're also not that big, about 160,000 hectares planted compared to 530,000 for Golden-Agri. So the benefit of the upstream focused companies is that their EBITDA margins are typically higher because the entry barriers for the plantations is high, obviously now with no new plantings going on. And for the downstream players, the integrated players with the downstream component, the downstream always has a lower EBITDA margin. So you'll find lower EBITDA margins for the downstream players, but of course it's a much higher volume, so the capex requirements are also lower. An additional benefit for the integrated players is that, as I already mentioned to you, that they are less dependent on the volatile CPO prices.
Okay, so we can move on to the third question. Also a bit on the finance side, the pre-submitted question. I understand that you presented just now the Golden-Agri is committed to paying 30% for dividends out of the underlying profits. And you also mentioned that the key priority is to bring down the debt level. So this question is about talking about priorities of using cash flow between organic and inorganic capex and cash return to shareholder. So would you like to add a bit on to that, on where are the key usage of the cash flow?
Yeah, so organic capex, that is the 300 million per year that I mentioned. About half of that is for the upstream, or actually a bit more, I think, which is for the replanting, as I mentioned, which is very important because you can see across the industry yields coming down because of trees getting older, and many companies are postponing, delaying the replanting. The issue with the replanting is that once you plant a new tree, it takes about 4 years to start producing fruits again. 7 years to reach maturity. So many companies are not willing to to cut down and replant. They delay that. For Golden-Agri, we do see the importance for our long-term growth. So that continues to be a priority. Second, as I mentioned, the deleveraging, trying to pay back some of our debt. Then after that, it would be returned to investors in the form of higher dividends or potentially share buyback.
Okay, so that gives a bit of a light to how the cash flow will be prioritized in the usage. The fourth question that was pre-submitted was, what is a Golden-Agri plan to bring higher and sustainable value? So we saw your presentation just now talking about investing into technology to bring up the yield. So what are the plans to bring higher and more sustainable values?
Yeah, so I think the high yield, the high productivity of our, at the end of the day, we are a commodity. So for at least for the palm oil, and that is why low cost of production through high yields and low cost in terms of the mechanization, that continues to be a differentiating factor for Golden-Agri. Then in the downstream, we look at the margin enhancement through the higher value added refined products that we continue to develop. And then finally, the traceability. I think one differentiating factor is that you can sell your products as being certified, sustainably produced. That is another way that we can differentiate and enhance our margins.
Hey, thanks, Mr. Richard, for that answer. We are moving on to the last question on the pre-submitted list. So I just want to remind all our viewers that if you would like to ask any questions, do put them in the Q&A. We have a few questions coming in. We'll try to answer all of them, okay? So the final question on the pre-submitted list, what is the trend of palm oil and how will ESG affect the trend of palm oil? I believe it's palm oil prices.
Yeah, so I already discussed how we look at the CPO price development. We think that the current level of about 800 to $900 per ton is very sustainable given the tight supply and demand situation, and we see the potential for further increase in price in the future, given the continued growth, for example, in the biodiesel on the demand side. And on the supply side, we see the climate change, the weather conditions, they are increasingly impacting production. So that will further tighten the supply and demand and support prices. Now ESG is a very important factor, and we do see that that a lot of attention has been paid to palm oil when it comes to sustainability. In fact, long before other vegetable oil seeds came under scrutiny when it comes to sustainability. So the benefit is that palm oil is a decade ahead of the other vegetable oils in terms of regulation and certification. So that allows, we believe, palm oil to potentially, get better appreciated against the other vegetable oils than it has been in the past. And as you may know, earlier this year, we for several months we saw palm actually trading at a premium to the other vegetable oils. while historically it was trading at a discount of about 10 to 15% to soy, for example. So we're certainly optimistic that palm oil prices will continue to be strong, even with the ESG concerns.
Hey, thanks for that answer. So we have completed the pre-submitted list. We are now going to the live Q&A. I saw 3 questions coming in from our viewer, George Lee, and we hope that you can post your questions so that we can get to them shortly. So the first question by Mr. George Lee is, how does the depreciation of rupiah impact Golden-Agri profitability?
Yes, well, it's fairly neutral. You know, in theory, you could say that because of our revenue, our earnings are mostly in US dollar because you know the palm oil is sold in US dollars, and then about 60% of our cost is rupiah based. So you know, when the rupiah depreciates, then our cost comes down relative to the US dollar. So that should be a benefit. But you know, at the same time, we also hedge. You know, so that means that depending on you know where the currency moves, we can either have a forex loss or a gain. But because of the hedging and the natural hedges that we have in place, you know, the impact of the forex will always be limited.
Okay, so thanks for the answer. Question number 2 by Mr. George Lee is, what is the foreseeable future for the strength of the rupiah, in your opinion?
Okay. Historically, the rupiah has seen depreciation against the US dollar because inflation, you know, has always been quite high in Indonesia. So I do think that this trend is not as strong as it used to be, but the direction will not change. So we do expect the rupiah to depreciate against the US dollar over time.
I tend to agree with that opinion, because if you compare to the Sing dollar as well, you can see over a very long period in history, it has always been the case that the Sing dollar is also slightly stronger than the rupiah. So I think that trend will continue in line with what you are foreseeing as well. Okay, the third question on the Q&A would be, palm oil price has been falling since its peak in 2022. What is the foreseeable future of palm oil prices? You mentioned earlier it is likely to be sustainable, but do you want to give like
Yes.
a certain range that you're looking at?
Yeah, so yeah, I just want to quickly repeat that you must realize that 2022, you know, you know, it was previously mentioned, we talked about a high base, and you know, 2022 really set a or 2023 really set a high base, you know, for the palm oil. So what we saw in 2023, $800 to $900, and what we think we can continue to see is still above the historical average, you know. So we do see still fairly strong CPO prices today. But if you, of course, if you compare it to 2022, it looks low. But that was really an exceptional situation we believe.
Okay, so that's the Q&A session questions that we have so far. I'll move on to some of the questions that I have when I saw your presentation earlier. One of them is on the increasing bioenergy demand. Okay, so can you elaborate a bit more on the impact of the Indonesian government biodiesel mixture mandate to increase from B30 to B35 on Golden-Agri domestic palm oil demand in Indonesia?
Yeah, so the biodiesel program in Indonesia is a very positive development for the palm oil price globally. As you may know, the Western economies they've had their biodiesel policies in place for many years. You know, US and Latin America for the soybean, and then Europe for the rapeseed. So and these biodiesel policies are really there to increase demand and thereby support the price of the vegetable oil. So we see the same in Indonesia with a very successful program. I think B35 is probably the highest in the world right now, and this is actually financed through the industry itself. So it's a very successful program. The increase from B30 to B35 increased demand by another 1 million tons to about 12 million tons of biodiesel to be consumed. So that is significant. For Golden-Agri, because of the increase in the mandate, we've also increased our capacity by about 400,000 tons to slightly over 1 million tons per year. And in 2023, we were granted a 24% higher volume, which means that the 1 million tons is fully allocated to meet the government mandate for Golden-Agri.
Oh, so I see we are increasing the production to meet this increase in demand in biodiesel, in bioenergy. So my next question is related to this. So how do you see the correlation between oil price and crude palm oil prices? Will the oil price increase or increase in demand affect palm oil prices, and are they positively correlated? How do you see that?
Yes, no, definitely. Because you know, like every vegetable oil, actually every biodiesel cannot, you know, crude oil is still cheaper. Crude mineral oil is still cheaper than biodiesel, right? So that's why biodiesel typically depends on some form of government subsidy, which means that if the crude price goes up, then the crude mineral price goes up, then the subsidy is less, right? So so that's the correlation. But you know, it's not that elastic because you know, these government policies, you know, they're policies, right? So they're put in place for a year, and they don't fluctuate with the market as much. You know, of course, you also have the export market for biodiesel, but Golden-Agri is not really involved in that right now because you know, we can sell it domestically. Now, a real tight coupling between crude and CPO. I mean, we've had that in the past, but then crude has to be you know, really expensive, like $120 per barrel or something like that. You know, which we haven't seen in recent years.
Yeah, I believe if crude go to that price level of if crude oil go to $120 level, there might be some serious geopolitical issues going on.
Yeah, I would say so.
Yeah. Okay. So the next questions, also one of the pre-submitted one that we have. It's about what are the main factors contributing to the slight decline in Golden-Agri plantation production output in FY 2023.
Yeah, so we had two issues. One was the weather conditions, which were very erratic. We had a lot of rainfall in the beginning of the year, which impeded production. And then we had the El Nino, the dry season, towards the in the third quarter of the year. So weather conditions reduced our production somewhat, but I think a further drag on our production, and that will continue in the coming years, is really the aggressive replanting program that we're doing. Last year, I think it was about 10,000 hectares less producing, simply because we were slightly over 10,000 hectares. Because so you know, when you cut it down, it's basically you take it away from your production, right? And this year, for the first quarter, we already did 6,000 hectares, you know. So that's a short-term pain that we must take in order to ensure that we have larger production in future years.
Okay. Okay. So that brings us to the next question. So, are there any other measures that Golden-Agri take to rejuvenate its plantation and sustain the production growth?
Yeah, so it's really twofold. It's the higher yielding seed. So Golden-Agri for more than a decade, for almost 2 decades, Golden-Agri has been doing research in producing higher yielding seeds. So initially that was done through crossbreeding, where we were taking different families of seeds, you know, put them together to get a higher producing seed. And that's already resulted in maybe, you know, 20% higher production or so on average. But we've gone one step further through this crossbreeding. We have discovered some super trees that were doing exceptionally well, like they would produce double what other trees would produce. And through tissue culture, which is cloning, we have been able to copy these trees, have identical trees, exactly genetically and growing production in the future. The other factors are on the cost side. labor intensive. You know, all the harvesting is done manually, and we are trying to bring mechanization in more and more. For example, our new plantings, they make space for machinery to assist in the harvesting and transportation of the fruit bunches, and that will help to continue to bring down costs.
Okay, I think the time now is 8 p.m. and that is the time that we have for today. I would like to thank Mr. Richard for your answers and your insightful sharings today. We hope that everyone found this Corporate Connect session useful and informative. If you do have any questions, please feel free to contact the Investors Relation of the company Golden-Agri. If you miss any part of today's session, you can rewatch the webinar on SIAS Facebook and YouTube channel. Corporate Connect is our monthly webinar. Do visit our website to get updates on our upcoming investor education program and initiative. You may also type in the chat box right now to let us know which are the listed company you would like us to feature next. And then finally, I would like to thank everyone for joining us this evening. Take care and have a good night. Goodbye.
Thank you. Bye-bye.